Good afternoon, ladies and gentlemen. A very warm welcome to the Q4 and FY26 earnings conference call of Krishana Phoschem Limited. From the senior management, we have with us today Mr. Praveen Otswal, Promoter and Managing Director, Mr. Pukhraj Kantar, Group Financial Advisor. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Pukhraj Kantar. Thank you, and over to you, sir.
Thank you, madam, and good evening to everyone, and welcome to earnings call of Krishana Phoschem Limited. Before we begin the earnings call, I would like to mention that some of the statements made during today's call might be forward-looking in nature, and hence it may involve risks and uncertainties, including those related to future financial and operating performance. Please bear with us if there is a call drop during the course of conference call. We would ensure the call is reconnected the soonest. I would like to hand over the conference to Mr. Praveen Otswal, Managing Director of the company. Over to Praveen.
Good afternoon, everyone. Thank you for joining us for Krishana Phoschem Limited Q4 and full year FY26 earnings call. We are pleased to report a year of exceptional performance. Our results reflected disciplined execution, a successful scale-up of our core operations, and significant momentum across our strategic growth initiatives. As we review the year ended March 31st, 2026, we look forward to discuss how these milestones strengthen our foundation for the future. I will begin with the dynamic industry snapshot, dive into our stellar financials and operational performance, key strategic developments, wrap with our closing remarks, then we will open the floor for Q&A session. On Rabi season, the quarter ended March 26 witnessed stable demand dynamics during the Rabi season. This was reflected in strong industry performance, with P&K production reaching 15.76 lakh metric ton during the peak period, marking one of the highest monthly output levels. March saw a natural seasonal moderation in demand as key crops such as wheat and mustard approach maturity, consistent with typical fertilizer application cycles. The industry concluded Q4 FY26 with comfortable inventory levels of 177 lakh metric ton, indicating balanced supply-demand conditions and healthy channel inventory levels. Global cost environment. While domestic demand remained stable, the global input cost environment tightened towards the later part of the quarter. During January and early February, input prices remained relatively stable. However, from mid-February onwards, global market witnessed firming trends driven by supply-side constraints, tightness in gas-linked production, higher logistic and freight costs. As a result, ammonia prices moved up sequentially during the quarter. Sulfur prices also firmed up towards March. This created a timing mismatch where domestic demand was slowed down in March while input costs were increasing, leading to higher cost pressure in the closing. Given the industry reliance on imports for 90% of key intermediates, these global movements had a direct impact on cost structure. Policy framework. The NBS framework continues to be a key stabilizing factor for the sector. The recently announced NBS support is expected to help offset input cost pressure to lower burden on farmers. Market evolution. Amid these dynamics, the industry continues to undergo a structural shift in product consumption patterns. DAP prices and availability have led to gradual shift towards more cost-effective and balanced nutrient solutions including NPK complexes and SSP. This trend reflects both affordability, availability considerations, and increasing awareness around balanced fertilization. As a result, integrated players with diversified product portfolio are structurally better positioned to navigate input volatility while capturing evolving demand patterns. Outlook. As we look ahead, the industry enters the new fiscal year with a mix of supportive demand drivers and evolving cost dynamics. On one hand, a stable agricultural environment supported by favorable monsoon outlook provides a constructive demand outlook. On the other, input cost volatility and global supply uncertainties remain key monitorables. In this context, the combination of the recently announced NBS support, structural shift towards balanced fertilization, and continuous focus on integration and efficiency will play a defining role in shaping industry performance going forward. Financial performance Q4 FY26. Coming to the financial performance for the quarter, the company delivered a record performance. Revenue from operations stood at 756 crore, up 59.8% year-on-year, primarily driven by higher sales volume supported by strong Rabi demand, along with better realization across product segments. EBITDA came in at 90 crore, registering a 59.1% year-on-year growth, supported by operating leverage from higher volumes and stable cost management despite input price volatility. PAT reached 83 crore, up 54.9% year-on-year, driven by scale benefits and deferred tax benefits. EPS stood 13.4 compared to 5.3, reflecting 152.8% increase in line with significant improvement in profitability. Financial performance, financial year 26. For the year ended FY26 marks a benchmark year with strong growth across all key financial metrics. Revenue from operations stood at 2,418 crore, up 78% year-on-year, driven by significant volume growth and strong demand across fertilizer segments. EBITDA increased to 298 crore, up 62% year-on-year, supported by improved operating performance and a favorable product mix. PAT stood at 180 crore, up 109% year-on-year, supported by financial efficiencies, including deferred tax benefits. EPS came in at 29.1 compared to 14, reflecting a 108% year-on-year growth aligned with the overall profitability expansion. Operational highlights. Our operational performance reflects strong execution and effective utilization of capacities. For the quarter, achieved fertilizer production 94,103 metric tons, driven by peak Rabi season demand and improved operational throughput. Maintained healthy utilization across NPK, DAP and SSP plants, with certain units operating above 100% capacity, reflecting strong demand and efficient plant operations. For the year, achieved a total production of 3,97,263 metric tons, supported by high demand across markets. Record high utilization levels in NPK, DAP and SSP plants, operating above rated capacity, highlighting strong market acceptance and efficient asset utilization. Coming to capacity expansion and strategic development, during the year we successfully completed a significant capacity expansion. NPK DAP capacity enhanced by 50% to 4,95,000 metric ton per annum and existing SSP capacity at 1,20,000 metric ton per annum, taking total phosphatic fertilizer capacity to 6,15,000 metric ton per annum. Backward integration strengthened with sulfuric acid capacity of 99,000 metric ton per annum. This expansion has been funded through a prudent mix of internal accruals and term loans, reflecting disciplined capital allocation. On the part of green commitment, as part of long-term sustainability strategy, KPL has entered into 10-year green ammonia sale agreement under India's National Green Hydrogen Mission for 70,000 metric ton per annum. This initiative enhances supply security, supports decarbonization, and improves long-term cost visibility. We are also pleased to highlight that our credit rating has been upgraded CRISIL to A+ stable, reflecting improved financial strength and business fundamentals. With enhanced capacities now operational, we expect the benefits of this expansion to meaningfully reflect in our performance from FY27 onwards, supported by improved scale, operating leverage, and better efficiency levels. Combined with our continuous focus on integration and sustainability initiatives, we are well positioned for the next phase of growth. We remain committed to deliver consistent performance and creating long-term value for our stakeholders. Going forward, we will continue to keep you updated on key developments. Thank you for the continued support. We now open the floor for the question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to all, you may press star and 1 to ask a question. We have the first question from the line of Aditya Agarwal from Motilal Oswal Financial Services Limited. Please go ahead.
Hi, sir. Congratulations on a set of numbers and thanks for this opportunity. Just wanted to understand what are our plans going forward for the next couple of financial years, and how are you projecting our numbers for the next financial years?
Look, we, as our MD has told, our new expansion has already started production, and we hope in the next 3-4 months it will stabilize. So we hope this current year we will be able to show a growth of more than 40% in all parameters.
Understood. Sir, also there was some news yesterday that the
Sorry to interrupt in between. Aditya, your voice is not audible.
Sorry, hi. Am I audible now?
Yes,
now.
Yeah, so there was some news yesterday that the government has also given some relief on some nutrient-based fertilizers. So how will that affect us? Is it beneficial for us?
Obviously, that as the input prices have gone up substantially, and all fertilizer manufacturers were expecting that the government will come out with some support. Though that support has not compensated completely the input price increase, but yes, it will offset to a great extent, and that balance will increase by MRP. So I think this next quarter, this position will be reflected in a better performance.
So you mean to say that you will pass on the additional price hike to the customers, and we won't have any bearing or loss due to this, right? Is my analysis correct?
Obviously, look, the price rise has been phenomenal in the last quarter, and it is not possible to absorb. Yes, of course, we will pass on. We will absorb to some extent, and as a result, our profitability is expected to come down slightly during the current year FY27. But a major part will have to be borne by the consumer.
Understood. And sir, I know we are adding another plant in Dhule. In addition to that, do we have any other capex plans or any other capacity expansion plans?
No, so far we have not planned anything. Whatever we had, it has been implemented.
Okay. Understood. And one more thing, sir. So I was just wanted to understand about our receivable days because I saw that our receivable days has touched around 100 days. So will we needing any other working capital financing, or how are we looking to reduce this going forward, or this is a sustained number of days which is receivable that we will have?
So obviously, what happened during the last earnings call also, I explained that the demand for different variants of NPK is rising in India. We have been producing one variant at 20-20-0-13, and even the demand of this product we have not been able to meet adequately. As a result, our plants are operating purely on this one product. Now, to meet the market demand and just that our consumers should think that we are capable of providing all variants, we imported other variants and that we supplied. And that has happened during the last quarter. As a result, on the balance sheet side, on the day March end closing, the receivable levels are going up. But otherwise, but for subsidy, our receivable levels are normally in the range of for 50 to 55 days.
Understood. Sure, sir. I think that's it from my side. I'll happily join back in the queue. But thank you so much, sir, for answering the questions, and congratulations again on an excellent set of numbers. We would also like to meet you guys sometime soon. So we'll just get in touch with your team.
Most welcome.
Thank you.
Thank you. We will take the next question from the line of Dhruv Mukesh Bajaj from Growth Sphere Ventures. Please go ahead.
Yes, thank you so much for giving me this opportunity, and congratulations, sir, on an amazing quarter and amazing annual year. So, given the disruption that you have seen mainly on the supply front of input, so is it fair to say that April has been pretty slow on the demand front as well, given the increase in the prices as you mentioned? And since our new capex has also come live from the start of April, so how do we see the near future going ahead in terms of the demand side?
Look, 140 crore population of India needs to be fed. So,
absolutely,
whether you compromise on any subject or not, but on food and consumer items, you cannot compromise. Farmers have to produce the agriculture output, and they need fertilizer. And at the same time, so as far as I see, the domestic product manufacturers will not have any pressure on as far as demand is concerned. In any case, for the sake of just for hypothecation, that in case something happens and demand goes down, you should know that phosphatic fertilizer almost 40% we import. So, as far as domestic manufacturers are concerned, though I'm sure, including import, the demand is not going to go down. But still, for the sake of understanding, if it goes down, we are not going to affect it.
Definitely, sir. I was coming more from the angle that, as we mentioned earlier in our previous conference, that we are price makers because we make complex fertilizers. When we are not too much dependent on subsidy, and naturally we are able to maintain our margins versus our peers. So I was coming from that angle, like given the recent disruption, so you have already mentioned that we might have to take some sort of margin hit. Is it possible to quantify on how much margin we are looking at? Because there is a mix of distribution as well as our own manufactured products. Hence, it is a bit difficult for we analysts to decipher, like for instance, for a year-on-year comparison, our margins on EBITDA level have decreased from 15% to 10-11%, but that might also be because of higher distribution-led revenue. So is it possible to quantify that for the current quarter and from going forward as well? So we can understand, like, are we facing?
No. Right now it is not working out, because still we are working on to how to procure the material and at a reasonable price, and that reasonable price increase will be passed on to the customers because subsidy has already been announced. So we don't think so that we'll get a hit, but we are expecting some downturn in the first quarter. It may be in the first quarter, but after these downturn happens in the first quarter, we will be able to pass on all the price hikes to the consumers. See, please wait. Right now, we cannot.
Looking to the volatility in the market, price up and down, government policy, government decision on giving some required, our decision to pass on through increase in MRP, everything, it is a dynamic position. And we will keep on taking decisions based on our sustainability. And I'm sure no government would like that we will turn into losses. Yes, there can be pressure on the margin, but we will continue to earn profit.
Got it. And sir, there was a recent announcement on the credit front wherein although our ratings was upgraded, but there was a negative outlook given the fact that input prices are increasing, we have low stock of ammonia, and we also import rock phosphate, which we ultimately do beneficial process. So on that front, how are we placed in terms of input? And because we have also announced that recently we have tied up for some green ammonia. So will we be able to tap that thing from the domestic market in the coming year itself? So if we can give some sort of picture on that front, that will be very helpful because we are one of the more backward integrated players. So your commentary does help a lot.
Look, first of all, let me tell you this negative watch is for the industry, not for the company. The credit rating, all that for fertilizer as such because of this Iran-Israel war, paucity of gas, the availability of ammonia may be under distress. So for industry as a whole, they have put under negative watch. As far as company is concerned, we continue to be on the A+, so there is no issue. Another thing, green ammonia will be available only after 3 years. For the time being, we will have to rely only on grey ammonia. And for the last 2 days, you might have read in the press, the gas supply to the urea manufacturers have been restored to the 100%. As a result, we expect that ammonia supply will ease out in next 7 days.
So we are not having any issues with the raw material and further signing of this green ammonia will strengthen the company as a whole.
Got it, sir. And sir, based on our recent performance for the past 3-4 years, ours have been a relatively much higher margin business versus our peers. And complete backward integration other than ammonia.
If you compare 3-4 years, then we started production of NPK, DAP only from 2023. Earlier we were producing SSP, which is a low margin product. So by adding to this, and then last year we added even SSP urea also. So we keep on innovating, keep on meeting the demand of the market and giving the innovative product. So that way we are trying to offset the margin and offset the volatility in the market because of the price in few segment of the input material.
No, sir, definitely. I am not trying to gauge whether you are able to pass on the pricing or not. My question is a bit different. So since I am trying to understand the entire landscape of fertilizer players, so I wanted to understand why, so since we do our own beneficiation and produce our own sulfuric acid, and that's why we are more backward integrated versus some of our other complex fertilizer peers. So I'm trying to understand that given the outperformance on the numbers part, how much of the same is being led by our supply side cost dominance because we are backward integrated versus our ability to maybe cross-sell our products better than our peers because we have a good distribution network. So what are the key factors that have contributed to our success?
Backward integration has benefited. That is why our EBITDA margin is better than our peer group.
Right. But why can't other players also do this beneficiation?
Beneficiation as far as PRP is concerned, there are only 3 players in India. One is RSM Udaipur, which is government of Rajasthan undertaking. Another is Madhya Bharat Agro Protected, our group company, and KPL. So only 3 players. Otherwise, there is no rock phosphate reserves available anywhere so far at present. So I don't think it is available to anybody else.
Got it. Got it. So just one last question from my end was that what are we expecting in terms of the new nutrient-based subsidy? Because from what I understand, we complex fertilizer players don't get a lot of impact from all these subsidies. So is that a fair assessment, or does that also play a major role in our performance as well?
It is not fair. The subsidy constitutes a substantial part. Almost in NPK, 40% revenue comes from subsidy, so it will be unfair from the government initiative. They are doing very well. Yes, of course, during this first half year, the compensation as announced yesterday does not meet adequately the price rise. That we will offset by increasing MRP.
Got it. Got it, sir. Congratulations on an amazing set, and thank you so much for your time, sir.
Thank you. We will take the next question from the line of Nitin Kaushik from Afin Capital Private Limited. Please go ahead.
Hello, good evening, sir. First of all, congratulations for such a good result. My first question is regarding inventory and receivables. They have increased significantly. So should we see this as strong future demand or slower sales in future?
I think inventory part is concerned, there has not been any rise. Yes, receivable part, there has been rise, which I explained to an earlier our participant, that in the last quarter of this year, we have imported other variant of NPK, and as a result, that receivable is outstanding, and that will be realized during the current quarter.
Okay, sir. So, sir, this question was arised because in FY25, if we see in cash flow, it was around an increase of 664 lakhs, but right now it's more than 16,000 lakhs. So the increase is huge if you see that.
Hello? 1600 inventory. 200. Where have you? Just hold on.
Look, raw material increased from 60 crore to 93 crore, and then finished goods 55. Finished goods, as I told you, this rise which is visible is because of supply to these cooperative federations, where we supply, but we are not permitted to issue invoice till some inspection or some which is called VIA. So technically, this 161. It is the stock lying with this market government authority. So otherwise, you can see it is almost in the same range.
Okay, sir. Got it, sir. So the next question is, recently Skymet forecasted that this year will have a weaker monsoon compared to previous year, around 94% long period average, which was around 106% long period average previous year. So would it have any impact on fertilizer sales in coming months?
The monsoon forecast is around 95% of the normal monsoon, so this is not a major variation, and the major reservoirs or the rivers or what you call it, bore wells, so the water levels are high in comparison to the older times in the country, and we are not expecting any stress on the agriculture part. And in continuation, so the fertilizer is also will be in demand for the agriculture crops.
Okay, sir. Sir, so could you please shed some light on purchase of trading stock, because it increased more than 6 times this year.
Purchase of?
Trading stock.
Purchase of stock in trade.
I have already explained to you that we have been manufacturing only one type of variant of NPK. There is a demand for other variants, and just that the consumer should feel that we are capable of supplying all type of variants. we resorted to import of the other variant and supply to our farmers. That is why this import has increased, which is nothing but the trade goods purchased.
Okay, sir. So that's it from my side. And sir, again, thank you for your attention.
Thank you. Thank you. Next question.
We'll take our next question from the line of Nirav Ashar from Latin Manarlal Securities. Please go ahead.
Yeah, good evening. Am I audible?
Yes.
Yes.
Good evening, sir, and congratulations on a great set of numbers. I think it's kind of a picture-perfect situation as far as the capacity addition is concerned, as far as the performance is concerned. I would like to get some color on what are your expectations as far as the revenue growth for the current year is concerned. What kind of, after having put in this kind of capacity utilization, which is so impressive at 615,000 metric tons, what kind of capacity utilization are you targeting for the current year? What is your take on margins? And what kind of headwinds do you see, especially with respect to factors like the increase in the cost and the working capital issues?
Okay. See, we remain committed to the best utilization of our manufacturing facilities, and you have been seeing our capability of manufacturing the fertilizer products in last 2-3 years. So our team of manufacturing is working on to give the best and efficient results at the manufacturing units. And this year also we are committed to perform as performed in our last 2-3 years. And the new expansion which has already started this month, in first quarter or second quarter, we think that there can be a initial teething problems, but then this capacity will be fully utilized in coming quarters. So one point is this. The second point is again on coming on to the profits and the raw material cost. We have been explaining you that the raw material cost have rise. That is for sure, because it is coming from that war area. And the prices have to be compensated either from the government or from the MRP to the farmers. The government has already declared their NBS policy. Already they have come out with the numbers, and we have also started working on to increase the MRPs. And we are sure that after the increase of MRPs of the various products, the market remains sustainable, and when the product is already in demand, and as told to you, there could be a slight pressure of margins in the first quarter, but then we don't see any margins in the coming quarters at the later part of the year, because then we will be passing on the cost to the farmers as well. So this is in all summary, best utilization of the asset and trying to maintain the margins after this quarter.
Thank you, sir. But I mean, in terms of some quantification, I mean, as we've seen in this particular year, that the revenue growth has been impressive at around 80%, close to 80% revenue growth. So, I mean, I'm sure you're working with some kind of figures for FY27. So, could you give me some color on
yes,
what?
On a 1,65,000, right? 1,65,000 tons is the capacity increase. 40-50% also, if you think it of 80,000 tons. 80,000 tons into 80,000 tons into around 60,000 rupees per ton. So you can expect a top line increase of around 500 crores. So this year we had around 2,400 odd crores. So you expect an increase of around 500 crores more, 2,900 to 3,000. But this is all numbers based on the capacity expanded and the utilization of that asset.
Thank you, sir. So can I safely assume something like a 35 to 40% hike in the revenue?
Yes, including the import and manufacturing, we are expecting 40%. We expect 40% growth would not be a big issue.
And sir, what kind of margin trajectory are you working with, considering the fact that
we have repeatedly been told margin will be under pressure. Margin will be under pressure, and probably the kind of margin which we have shown during this FY26 may not be possible. There will be slight reduction because some part of increased raw materials will be absorbed by us, some part will be absorbed by Government of India, and something will pass on to the farmers. But of course, you rest assured, the company will continue to earn profit and a reasonable good profit.
Sir, can we expect margins to go into single digits? Operating profit margin, EBITDA margin?
see, again, we want to tell you that, we will try our best. We will try our best to maintain the profitability. We understand the investors' concern that the profits should not go down. But in the present scenario where the raw material prices have gone up and the prices to the farmers or MRP to the farmers will increase gradually, so we cannot quantify right now. We are trying hard that the profit should not go down, and we are much more concerned, and we still remain committed to the investors that we will work hard to sustain the profits. But definitely first quarter may be difficult, but in coming quarters and the year along, we will be able to sustain the profitability.
Thank you so much for your input, sir. And I wish you all the best for the coming quarters. Thank you, sir.
Thank you very much. And don't worry, we are working on it.
Thank you so much, sir.
Thank you. We will take the next question from the line of Rishikesh Rajesh Shah from Alchemy Capital. Please go ahead.
Yeah. Hi. Am I audible?
Yes.
Yeah. Congratulations on good set of numbers. My questions were mainly regarding the volumes and EBITDA. So what is the trading volume that we did in FY26?
Look, trading has almost, our manufacturing has been about 1,900 crore and the rest has been trading.
Around 500 crores is trading.
Yes.
Yeah. Okay.
550 crores.
No, I'm asking the volumes.
At a metric ton?
Okay. Just hold on.
Volumes, trading volumes.
Yeah, just hold on.
It is, the trading was 93,000 metric ton.
93,000, and that is included?
So 93 is trading and 383 is manufacturing.
Okay, understood. And so what would be our EBITDA per ton on the manufacturing side, manufactured?
It is in the range of 5,500 rupees.
5,500. And sir, what was it in March 25 financial year?
It was 6,000.
6,000, okay. So actually it has decreased from FY25 to 26, right?
Yes, slight decrease. Yeah. Our overall EBITDA margin, which was 13.54%, has come down to 12.34%.
Right. So what I wanted to ask is, see, our phosphoric acid capacity utilization has increased, our BRP crushing capacity has increased. So what is the reason for lower margins when our...
Sorry for the interruption, but as you have already asked me what has been the trading. In trading, the EBITDA margin is 36%. And our trading turnover has gone up from 160 crores to 550 crores rupees. So obviously the compressed margin will
No, I'm asking on the manufactured side.
No, manufacturing we have maintained.
No, sir, so my question is, our EBITDA margins on manufacturing side, EBITDA per ton on manufacturing side, what would be that in FY26?
FY26. Only manufacturing EBITDA. Only manufacturing. In my opinion, it is the 5,900. We have maintained the last year's EBITDA margin.
So that is around 5,200 or something?
Yes, we have maintained whatever has been the 24-25, it has been maintained in 25-26.
Okay, understood. Thanks. That's all from my side. Thanks a lot.
Thank you. We will take the next question from the line of Zohaib Rashid from Swing List. Please go ahead.
Hello. Thank you for the opportunity and congratulations for a great set of numbers. So I wanted to ask that are we having any problem with the procurement of sulfur as we, procure it domestically? I understand there is a price hike, but are we having also, problems in procuring it because we procure it from domestically from Indian refiners and smelters? So is there a problem in procurement as well?
No problem. Only the price increase is there, which we are already working on to get the best price, and ultimately the cost has to be passed on to the consumers. And our plants will be operating.
And sir, are we expecting any increase in subsidy from government as the cost is going continuously up?
See, already the NBS has been announced yesterday and the notification has been received today. The subsidies have been increased and the difference has to be passed on to the consumers. For this 6 months, the subsidy has been announced.
That's nice, sir. And sir, how much must be the MRP increase of NPK and DAP and SSP, after February?
After February, we have been working last 10, 15, 20 days. And since the subsidy announcement has already come out, we are expecting around 25 to 30% of price increase in coming days.
Okay. Thank you. That's all from side and best of luck.
In present scenario, and what happens if the prices go down or something happens, because already the prices are at the top and the war has stopped. We are let's see how the things move in terms of costing.
Okay, sir. Thank you.
Thank you.
Thank you. We will take the next question from the line of Dev Gulwani from Care PMS. Please go ahead.
Thank you for the opportunity. Company imports low-grade phosphate rocks and convert it into high-grade rock. So is it more beneficial than importing high-grade phosphate rocks in terms of price?
No, see, we are not importing low-grade. We are just getting the low-grade rock from the local mining institute, which is a government of Madhya Pradesh company, MP State Mining Corporation Limited. And that is the rock we are beneficiating, and definitely that beneficiation is always better, and it gives a definitive margin in the numbers, and the capacity is at 200,000 tons, and we are utilizing that capacity in the range of 50 to 75%, and other rock which we are importing, whether it is medium grade or high grade, that is being used for the manufacturing of fertilizers directly.
And what is the conversion rate? So approx how much low grade rock phosphate is required to produce a single metric ton of phosphoric acid?
It depends.
What quality of input?
Low grade, we are getting low grade from 14% to 20%. So what type of low grade you are getting, accordingly the output will be there.
Still any approx number?
You can see last year, as against the capacity of 200,000 tons, we produced more than 70,000 metric tons of high-grade rock phosphate.
See, if you give an input of suppose 15% and you get an output of 30%, so around 2.5 tons of rock is required. This is all.
It keeps on changing.
It keeps on changing. It is not like it cannot be some rule formula that 1 ton, or it keeps on. It keeps depending on the input what you give it.
Okay, understood. Thank you.
Thank you. We will take the next question from the line of Rishi Mehta, an individual investor. Please go ahead.
Hello. First of all, congratulations to the whole team for the achievement. My question is, as you mentioned, the plant are operating on the 100% capacity. So how much life you assume, and is there any risk of asset stress?
No, there cannot be a risk of stress because if you maintain a plant at a very good level, the plant can operate along for another 30, 40, 50 years, 60 years. And as we have already told you that since we are maintaining the efficiencies at 100%, so we maintain our assets in the best way to give the good results in terms of quality and quantity. And we expect our team to maintain those plants for another 50 years.
Okay. And when we will start receiving the green ammonia?
After 3 years.
Okay. Thank you.
The contract says the green ammonia plant has to be started in the 3rd year, and we would be eager to get that green ammonia very fast, because then what happens is that it reduces our dependency on any other supplier, and the green ammonia will ultimately be a great achievement for the country as a whole also, and we being the biggest of the consumers in the country, in the world, it will be a pride for us and pride for the investors as well.
Okay. Thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management should be able to address all the queries from the participants in the question queue, we request you to kindly limit your questions to 2 per participant. If you have a follow-up question, please rejoin the queue again. We will take the next question from the line of Manali Chaturvedi, an individual investor. Please go ahead.
Good evening, sir. Hello, am I audible?
Yes.
Yeah. Sir, so my question is, input costs were rising in Q4, then how did you manage to deliver such strong EBITDA margins despite this?
See, the input cost has risen in the last part of the Q4, and we maintain the reasonable inventories full year around. So EBITDA margins were never under pressure for this Q4, and let's see what happens in the coming quarters.
Okay, sir. Thank you.
Thank you. We will take the next question from the line of Aditya, an individual investor. Please go ahead. Aditya, please proceed with the question.
Yeah, hi. Am I audible?
Yes, you are.
Hello. Yeah. Yes. So my first question is regarding your working capital side. So if I am understanding correct, is your trading margin is like 2 and 2.5% in between trading business margin?
EBITDA margin is 6% in trading, 5 to 6%.
Okay. And sir, is your interest cost is 8 to 9% in between, right? So the short-term borrowings.
You ask me the rate of interest which we are paying?
Yes, sir.
It depends what type of facility we are using. If we are using in foreign currency, so far plus some reasonable margin of 30-40 basis points. If you are using WCDL, then some banks are charging the linked with T-bill with about 60-70 basis point above. Some are charging repo rate. But you can say it is in the range of 6 to 7.5%.
Okay. So I am asking because the short-term borrowing completely wiping out our net profitability in the trading segment, right? So we just take that front.
No, we did not get your point.
Will you please repeat?
I'm asking if the interest cost is more than your trading business margin. So it's a short-term borrowing completely wiping out our profitability on the trading segment, right?
शॉर्ट टर्म जो मार्जिन है वो कम है और इंटरेस्ट कॉस्ट ज्यादा है.
No, but look, in trading, as I told you, EBITDA is 6%, and we spend about in interest cost and depreciation is not interest is about it goes to 3%, so left over is 3%. Yes, obviously we are working only on 2.5 to 3% margin, net margin on import, nothing more than that. But the question is, when we are able to provide all type of variant, that is more useful. That gives some credibility to this organization that we are able to meet the demand of the market. It is not question of the profit. Import is being done to facilitate our consumer, not to earn profit. For profit, we have our production facilities.
Thank you. We will take the next question from the line of Bala Chandar, an individual investor. Please go ahead.
Hello. My question is mainly regarding the EBITDA margin and sulfur prices. And as we talk right now, the sulfur price is around 90,000 per ton and sulfuric acid is around 25,000 per ton. And this is 100% hike compared to the last quarter. And the full impact of this might only be seen in the next quarter, that I understand very much. And I also wish to be optimistic that the sulfur prices will come down. But there are concerns that under the new normal, the crude oil might be as inflated as around $90 for a longer period of time. And I know that we cannot pass on much burden to the customer. And also, the government also cannot keep on increasing the subsidy rates. So is the management taking any proactive measures to mitigate the risk?
The management, 90,000 is nowhere the price.
First thing is, 90,000 is nowhere the price. This is not the correct figure. And another thing is, we cannot pass on this statement itself as many limitations. Yes, of course, we can pass on. But then a balanced view has to be taken. How much we would like to absorb, how much government will support, and how much we will pass on. But of course, a part will be passed on to the consumer, no doubt. We have already increased the MRP.
Fertilizer remains to be an essential part of the life of a farmer. And India still remains to be an agriculture economy. And still the farmers will keep on farming and at large, fertilizer cost or any other cost has to be passed on to the consumer. So no doubt, the cost will not be passed on. Just to add this point, if we talk of the world scenario, still the prices in India are well within control.
All right. And can you please quantify the EBITDA margin for the next quarter? Because the next quarter is going to see the much impact due to the increased sulfur price.
We have already told you that we are working on it. Already the NBS has been announced. We have already started increasing the MRPs. Definitely, EBITDA with our old stocks and the new stocks which we are buying and the new MRPs which we are already giving in the market. Let's see what happens. One more thing to add to this. India's DAP availability and stock positions are very limited, so we expect the things in line.
As we told you, there will be some pressure, but we will continue to be in positive and have a reasonable profit. Rest assured.
Thank you. We will take the next question from the line of Anuj Haria from Interglobe Services. Please go ahead.
Hi. Congratulations on a great set of numbers. I just wanted to know for the coming for FY27, what will be the balance of manufactured revenue and trading revenue? Like for FY26, it was nearly a 80-20 mix. What can we expect for the coming year?
Look, on the FY27, based on the demand market, we have anticipated that we will be importing around 150,000 metric ton of material, which will translate into 1,000 crore rupees. And based on the capacity utilization on reasonable level, the growth in the manufacturing will be in the range of 25%. So overall, we hope 35 to 40% revenue growth in FY27.
Okay. And the other thing is, if you could just highlight what are the current sulfur and sulfuric acid prices that you are witnessing right now?
The prices are changing and prices are in the range of around 55 to 70,000 rupees per ton, depending on the supplier and what time we are buying and what are the payment terms. So it is changing. It has changed a lot in last 30 days, 45 days, and we are expecting changes in another 30 days. So it may start going down also.
Can we expect a 60,000 revenue per ton for FY27, and for the SSP fertilizers, can we expect around 15,000 revenue per ton, or there's a divergence in numbers?
15,000 we are recording at present.
15,000 we are, yes. 15,000 is already there, and 60,000 they mean to say 1,500 and 6,000.
Plus subsidy, I think.
He means to say 1,500 EBITDA in SSP and 6,000 in
EBITDA.
वही तो बोल 15,000 गलत बोल दिया 1,500. You are talking about EBITDA or you are talking about the turnover?
No, I'm talking about EBITDA. So basically 6,000 of EBITDA for NPK and approximately 1,500 to 1,600 for SSP, or?
Yes,
can be in the range, should not be an issue. And NPK, yes, 6,000 for plus minus 3-4% here and there.
Okay, got it. Thank you. That will be all from mine.
Thank you. We will take the next follow-up question from the line of Aditya, an individual investor. Please go ahead.
Our cash flow for the operations has turned negatively in this year for around 336 crore last year as a trade receivable. So can you just break down what percentage of these receivables are pending from the government subsidies versus credit extended to dealers, and are we seeing any subsidy realization cycle stretched beyond the historical 100 days?
You're talking about the bifurcation of subsidy and other receivables?
Yes, the credit extended to dealers.
Okay. Subsidy, because that import material we supplied substantially during this last quarter. So subsidy receivable is almost 400 crore rupees, and other receivables are in the range of 300 to 325.
Okay.
And we expect all these money to flow in this quarter, so we don't feel any stress on the cash flow situation.
Thank you. We will take the next follow-up question from the line of Nitin Kaushik from AFIN Capital Private Limited. Please go ahead.
Thanks again. Sir, my question is, since most of our capacity expansion is done now, so could you please guide us on CapEx going forward, if possible, as a percentage of revenue? So assuming that we are not doing any capacity addition going on. So what would be the maintenance capex?
The benefit capacity addition will happen only during the current year. We started production only from 1st April.
Yes, sir.
So during the current year only this new capacity will yield result.
So
sir,
you try to understand that 50% of the NPK capacity has been increased, and this whole year we can expect a 50% of 1,65,000 tons capacity increase, means it is around 80,000 tons, and 80,000 into around 60,000 rupees per ton. So we are expecting a top line increase of around 500 crores. This is what you want to know, or you want to know anything else?
Sir, no, sir, that was not my question. My question was regarding that we have done capacity expansion now. So going forward, what would be capital expenditure as a percentage of revenue, assuming that we are not doing any capacity expansion going forward?
We keep on planning the business expansions, and we keep on updating our investors as well as the regulators. And once they come out with any expansion plans, definitely we will update you. We are working on different projects, and we have a very good cash flow. We are expecting good cash flows in this year also. So as we finalize the project and capex, we will declare it.
Also, sir,
you have seen the history of our company, that we declaring the capex at appropriate times, and with a proper debt equity ratio, we keep on expanding.
Oh, yes, sir. Also, sir, if you could give FY27 estimates for capex.
When we have not declared with the regulators, we cannot come out right now. It is on the part of a statutory obligation to declare with the regulator, and then only we can come out with the exact capex for the year.
Yes, sir, I understand completely. Again, sir, thanks a lot.
Okay, thank you very much.
Thank you. Ladies and gentlemen, as there are no further questions from the participants, with that concludes the question and answer session. I would now like to hand the conference back to the management for closing comments.
Thank you. Thank you very much once again for joining this earnings call. If you have any further questions, please do not hesitate to reach out to our investor relations team. And thank you. Have a great day.
Thank you, members of the management. On behalf of Krishana Phoschem Limited, that concludes this conference. Thank you all for joining with us today, and you may now disconnect your lines.
Okay, thank you very much. Bye.
Thank you, sir.